And there you have it, the sound of the closing bell, the New York Stock Exchange. It signals the end to another week of trading.
It was a rough day for the Dow, which closed down more than 300 points. It was a similar story for the tech-heavy NASDAQ and the S&P 500. The S&P closed the day down around 1.5%. The NASDAQ ended up in the red, roughly 2%. J.D. Durkin is the host of the show The Street. He joins us now from the floor of the New York Stock Exchange. J.D., a big day. Bank regulators in California seized control of Silicon Valley Bank. It's the first time since the Great Recession that this has happened. Why is this a significant move?
Well, I mean, large in part, this is the second, really the second largest bank collapse that we've had in U.S. history. And to your point, the largest that we've had since the great financial crisis in 08-09. Whenever there is perceived instability, volatility, shaky ground with any name in the banking world today, there's going to be a lot of reverberations across the stock market today. One source I talked to today said, honestly, we all have PTSD from back in that era, and I think we're seeing that work its way out from investors as well. So you have a day like today when the markets immediately went red early in the day. The Dow and S&P quickly went into green territory by late morning. They did not stay there long. We really saw selling accelerate late into the day, even despite the fact that, all things considered, a pretty decent jobs number. But I think this SVB storyline is top of mind for investors and may be into next week as well.
That was going to be my question, JD, is looking ahead, what impact might this have on the markets?
I mean, it could absolutely be a tremendous one. You talk about the historical implications of a bank of this size, and this may actually be exposing further vulnerabilities with regional banks as well. You had this incredible era of quantitative easing where regional banks, the big banks, even to the tune of the central bank themselves, scooping up billions of dollars worth of treasuries and mortgage-backed securities, and they've been kind of quietly unwinding those balance sheets. And now you're showing a lot of these vulnerabilities, and there has been some kind of quiet whispers that maybe there's been some concerns with the banking sector, but this is now really front and forward. And I think for a lot of people, this is going to be a very difficult thing for investors to try and come to grips with, all while we're battling inflation. We're hanging on every data point. We're hanging on breathlessly to every word that Fed Chair Jay Powell has to say. This now throws a significant wrinkle into that equation for investors to try and figure out where stocks and bonds go from here.
JD, on the labor front, the U.S. created more than 300,000 jobs in February. That's down roughly 200,000 new jobs from the previous month, but still suggests growth in the workforce. What does this mean for the U.S. economy moving forward?
I think overall right now, honestly, the jobs report shows there is resilience in the broader economy, and maybe we don't have the concerns of this runaway freight train of inflation right now. 311, the top line number, a bit hotter than people had expected, but not unreasonably so like we saw a month ago. The really important figure is average hourly earnings. We saw that tick up 0.2% or 0.2%. But the good news is, even though it went up, the accelerating pace was not as much as a lot of people were actually very worried about. So had you not had the Silicon Valley Bank chaos or this crisis unfold today, I actually think investor sentiment in the major market indexes would have otherwise been a lot more positive because we've been eagerly awaiting for these jobs numbers. But let's not forget, it's not just today. We've got CPI inflation print coming out next week. That is also going to be one of the key pieces of data that Jay Powell and his colleagues at the Fed take into consideration for the next FOMC meeting. That's scheduled for March 22nd. So next week will be the final trading week before the Fed makes their decision, and a lot could certainly happen between now and then.
Yeah, we'll be watching closely. J.D. Durkin for us. J.D., always good to see you. Thanks so much.
Thank you.